Hello everyone, this is Blane Markham, the Chief Trading Strategist here at Markham Trading, coming to you with my weekly market update, breaking down what I'm seeing here in the markets, what our team is watching very closely, and what I think you should probably be paying attention to pretty closely as well. So let's go ahead and hop right into it. So of course, today I'm recording this here on Wednesday after the market close. Nvidia day has come and gone. This is a highly anticipated day for the markets, of course, because Nvidia was reporting their earnings from Q4 of last year. Today after the markets closed. And, overall, it was a fantastic report. As many people expected, NVIDIA delivered a very powerful double beat, both on earnings and revenue. That's what most people, I think the market was anticipating, was a really solid result from the company. The question was really going to be with the price action in the shares afterwards. And thus far, there was initial kind of pop in the stock. Shortly thereafter, much of that gain had faded. So there's certainly a lot of trading to be hashed out during the session on Thursday and, of course, on Friday to wrap up the week. But going to be really interesting to see where the stock actually settles out following that really powerful report and really good guidance they put out, too. So overall, given the pretty muted price reaction in the stock after that report, it really hasn't materialized totally into the market catalyst that we were anticipating that it possibly could be, to move the indexes, whether up or down, to really swing a lot of price action across the markets. But moving on from NVIDIA, go ahead and hop into our first chart right here. This is a chart of the S&P 500, and we're still seeing that very solid floor of support below this market, right around 6,800 hold. We've gone down and tested this numerous times here lately in the past couple months, but it's been very encouraging thus far to see that level of 6,800 hold. And actually here in Wednesday's trading session, the market was rallying, I think somewhat in anticipation of the NVIDIA report after hours. We did actually cross back above what had become kind of a shorter term ceiling of resistance. It actually had dropped down from where we previously were finding resistance in the market up around 7,000. We had actually started to feel some resistance in the market right around the 6,900 level and the 50-day moving average. That's our red line right here. But we actually saw the market pop above that level decisively today and actually close right around 69.50. So that was encouraging to see the market actually jump back above that 50-day moving average. Of course, again, we have a lot of trading left to go this week. So overall here, just looking at our chart of the S&P, we can clearly see the index is still in a longer-term uptrend as we're still trading above our 200-day moving average. That's our upsloping green line right here. So that's another really strong positive that we have continued to remain trading well above that 200-day. So that's encouraging here in the meantime. While this market has still roughly remained range-bound for the past 3 or 4 months, you can see, again, that range between 6,800 and still 7,000 is still holding quite tightly. The index has really struggled to break out of that consolidation, out of that range here. And at least for the headline index, we still feel that there is very solid resistance at 7,000, very solid support at 6,800, and any breakouts to either the upside or the downside outside of those ends of the range should be paid attention to and followed very closely. But as the main U.S. indexes continue to chop sideways, much like we're seeing here with the S&P 500, with all the rotation that we're continuing to see play out under the surface of the market, that doesn't mean that everywhere across the market and certainly across the globe that we're not continuing to see some really strong bullish opportunities. In fact, I'm actually going to go ahead and share one of these with you here next. So what we're looking at right here is actually a ratio chart, and it's actually looking at a ratio between the VEA ETF. This is the Vanguard Developed Markets ex-US ETF. So this fund is investing in developed markets around the world, except for in the United States. And this ratio chart is comparing that simply to just the S&P 500 index here, of course, in the United States. Now, what clearly stands out in this chart is that since the beginning of 2025, you can see that this line has substantially moved higher on several different occasions from the beginning of 25. So you can see we started all the way down here. We had a really strong slope up here in the first half of 2025. It was essentially flat for the most of the rest of the year. And of course, starting in December and really continuing to ramp through the early part of this year, year to date, we've seen some very strong sloping higher in this line. What this is actually indicating is that the developed markets that are represented by the VEA ETF have continued to substantially outperform the S&P 500 index over the past year and thus far this year to date. So that's what we can tell by this ratio chart here. As long as this line is sloping up like we've seen here over the past, call it 14 months, that's just indicating that VEA is outperforming relative to the S&P 500. So again, you can see the performance right here, seeing that it started here and it ended 2025 here. That's clearly showing that VEA did outperform relative to the S&P last year. And it is very clear this year we've had a very marked outperformance from the international developed markets compared to the US just this year. So this is something we always really like to track. We like to track relative performance of one asset class compared to another to really see where money's moving, where the flows are going, and where the momentum and inertia is in markets. And it's clearly showing up that we have very powerful momentum in developed markets overseas. We're continuing to see that bullish narrative play out. And because of that, we've continued to spot trade opportunities for our members, just like what we were talking about with VEA. So this is actually a chart of that VEA ETF. It's that developed markets ETF that's ex-United States investments. And so, of course, we were paying attention to this trend much of last year, seeing a lot of breakouts, a lot of higher highs and higher lows, which are all very bullish signs and things that we like to see. Certainly a lot of nice trend line buy signals coming out of those April lows of last year. But specifically here, more recently, we actually spotted a great entry opportunity as the VEA ETF was pulling back off of some new 52-week highs. It was actually right here in January. So we saw that really strong outperformance to begin the year. We saw the stock leap up to several new 52-week highs. We saw this breakout happening. We were just waiting for the ETF to pull back, allowing us a little bit better entry opportunity into this trade. So we saw it pull back here in the first couple of days of February, and then we actually started to see the trend reaccelerate higher. It was actually on this trading day right here. So really, just about 9 or 10 trading days ago that we spotted this signal. That day right there is actually when we sent out a trade alert to the members of our ETA trade alert service to go ahead and consider getting long VEA by purchasing call options on this ETF. Now you can see shortly after that, the ETF continued to accelerate higher in very short order. Just the very next day, it jumped up and hit a new 52-week high and continued to do that for several days following. And since those new highs, the ETF has also continued to make several new higher highs and higher lows, including today's session where we actually saw VEA close above 70. So clearly the trend underlying VEA here in the developed markets internationally is continuing to be quite strong and really one of the stronger trends that we're witnessing in the markets right now. So this is one that we're still riding with right now. We're still holding on to this trade alert, and it's actually performing quite well. And in fact, as of market close on Wednesday, the call option alert that we sent out to our members was sitting on an open profit opportunity of just about 55%, again, as of market close on Wednesday. So again, this trade alert is continuing to perform quite nicely. It's working out exactly as our thesis on this trade thought that it would. And so we're continuing to stick with this one again. We still like the trend quite a bit here. And we certainly hope that you're able to follow along with that ETA trade alert, along with many of our members, and be able to benefit to the upside from this trade here. But if you haven't quite signed up for our ETA Trade Alert service yet, no worries. Go ahead and reach out to the team. Go ahead and give Michael and the team a call, and they can get you set up so you can begin receiving these ETA Trade Alerts just like the one I share with you here for VEA. Now, with that said, just a couple things we're continuing to keep our eyes on for the remainder of this week and then also into next week. Certainly want to see how the semis and chip stocks play out on the back of that major Nvidia earnings report that we had in the after hours today. That was certainly a big catalyst. The market was kind of tensing up heading into it. And I think there's probably going to be some ripple effects in other stocks that are closely related to the Nvidia and AI chip trade. So certainly one thing we're watching there through the rest of this week. Next week, we also continue to get some major earnings reports in. There's some big software names reporting next week. There's a couple big retailers reporting next week. We also are going to be getting some really key economic data next week too. So certainly a number of things to be watching. They're on the horizon that we think that could be driving price action in the markets. But that's just giving you an idea of kind of what we are keeping a close eye on here. We're certainly, of course, watching the technicals and overall markets here, just like always, following our technical systems too. So that wraps up everything I want to share with my market update for this week. I hope you enjoyed watching this video. Thank you so much for tuning in. I'll be putting together my next market update for you next week. And so I hope you, again, enjoyed watching this video. But until then, take care, everyone. Best of luck trading, and talk to you again soon.